Oh man, my mic was off. Nobody told me. All right, now, hi, evening, everyone, and thank you for joining me on Fridays. And this is Facebook Live for Portfolio Building on Friday. Okay, now, Maudrine, it's my bad. My mic was on mute. All right, now, so let's get this session started officially. And again, all right, now, again, once again, this is a reminder that we do over and over again. If you're joining us for the first time, or if you have not done so before, right, go to streamyard.com/Facebook. You'll see a blue color button. Click on it so we can see your who's leaving comments during our live sessions. Yeah, right. And then the next thing over here, right now, if you want to still qualify for our hot and fresh 24-hour giveaway, right, that is about to end 1 week from now. Okay, 1 week from now, everyone. All right, all you have to do, okay, to get one of those 3 slots that we're giving away for free, okay, for our October and final 24-hour earning season for 2021. Okay, each of them are worth $397. Okay, now, so all of you can qualify for the draw just by clicking the like button to this Facebook Live session, right? And then, okay, share it out to the public. All right, now, so this share that you're doing has to be a public share. Right now, please understand, you can't share it to a specific group or you can't share it to multiple groups. No, it has to be shared, right? And then you'll see a bracket in public over there, right? And that's the button that you need to press, okay? All right, now, so as long as you do that, when my team goes around and check it, right, they will take down your names and you will be assigned a number, right? Now, so we will be drawing at the end of the period, okay? And the top 3 numbers that come out, okay, will be the ones who will gather that price that we have prepared, okay? All right, now, so all of you will get 1 and 3, okay, to the 24-hour October season, yeah? All right, now, so go ahead, click the buttons, all right, and share it out right now, yeah? Now, so thank you once again for joining me, and before I get myself scolded, all right, I will take off the button first. All right, now, so just before I begin, okay, a disclaimer once again, all right, before I do so, this is going to be a session where I'm going to take actions on my portfolio. This is a live portfolio that you'll be seeing over here, right? And actions that I build and do, right, to generate cash flows for this portfolio. Now, just to give all of you a direction of how I do this, right, I am only selecting fundamentally strong stocks and companies, right, that are at great valuations. That's where I start, okay? But I don't buy their stocks. Instead, I use selling options as a way to generate my profits. Now, so I call this the portfolio put strategy. Now, what do I do with this? I'm selling a put option, right, in collection of premiums. What's the worst thing that can happen? If the stock price drops, okay, I may have to commit to buying the stocks itself, right, at the price, at the strike price of the put option. Right now, for that, okay, for that promise that I'm giving to the counterparty, I'm actually going to get paid for it. Now, so what this means is, right, as long as the stock doesn't collapse, right, I don't have to fulfill my obligations, and yet I will be able to make money at the same time. Right now, so this model fits very well, right, with fundamentally strong stocks. Why? Because number one, we don't really expect big swings and big movements from these really big cash cow companies, right? They are usually what we call the slow and steady, right? So people don't like buying and holding these stocks, right? But they make perfect stocks when it comes to selling put options, more specifically portfolio put options. So that's what we adopt over here. But bearing in mind, all right, every put option that I'm selling, I'm actually allocating, all right, full cash to buying the stocks. So these are also called cash secured puts, which means in the event that I have to buy the stocks, my money is already set aside. My money is already allocated to buying these stocks, because when I buy the stocks, I will hold on to them until they turn profitable, right? Which I believe they will be. That's why I'm doing it in the very first place. Okay, right now. So I hope this analogy is simple enough, right? And thank you very much, Zen, for letting me know, right? And let's get ourselves started. Okay, now, so I will start the session with a portfolio, no, not a portfolio, but a market outlook, right? So let's get to the markets right now and let's see what we're looking at. All right, everyone. Now I have, let me load the right one. Right now, I have the SPX on my screen right now. And what do we have? We have the last breakout resistance being broken back down. So what this means is right now, the 4,510 level, all right, has turned into a resistance again. Right now, so this was the breakout move, right? It would have been the support, but it didn't stand the test, right? And now it's broken. Now, so what this means is, right, it doesn't mean that we'll go immediately all the way down, okay? But what it's telling you that right now, this stock is going to trade within this range. What's the range now? The range is going to be from 4,400 to 4,500. So that's the range we're looking at right now. How will it change? Only if, right, the S&P resumes and break back above 4510, right? If it doesn't, that's the range that we're looking at right now. Okay, now this may play for a long time. It may play for a short time. Nobody knows, right? Only when it unfolds. Okay, but based on the current weakness over here, if the market gets another trigger, right, to cause some fear, right, we may start to see this sell off, right? And this sell off can actually come very quick, right? Because you don't see any real supports from here, right, where it is right now, all the way to 4,400. So that's like, almost a 87-point drop, right, that is viable in the market. And for what I know, right, this may even unfold by the market closing today, because we have seen the S&P drop 100 points. It's not difficult, because 100 points is literally like a 2% drop with where the index is right now. Yeah, right now. So it's not like, it's impossible, right? Now, of course, I don't wish to see that so, right? But I'm just trying to put it out there. It's not like it's impossible, right? Now, but for that to happen, for the S&P 500 to actually go down by 2% in a day like today, right? Now, it has to be followed, okay, by this sector, right? Which is the high-flying sector, the technology. Right now, the technology is still holding their supports right now. As you can see, this support level over here, right, is still holding out on the QQQ, which is the 380 right now. So as long, 379 right now. So as long as the QQQ stays above 379, right, the technology sector seems all fine. Okay, but of course, this can twist very quickly as well, because the only thing that was really holding the market up was the big 5 tech stocks, right, the $1 trillion club. Right, they were single-handedly or five-fingerly, right, holding up the entire stock market just because of their market caps, right? But if we see a turnaround in these stocks, right, they could quickly pull the market back downwards, right now. So that's what we have in store. And as boring as it sounds, it doesn't change my outlook, right now. So I'm still going to build my portfolio. I'm still going to look for good possible ads, right now. But it will always be fundamentally sound companies, right? They are at cheap valuations, plus, right, they have to belong to a defensive sector. Why? Simple, because when money runs for cover, right, they will sell off the technology stocks, because that's where all the fund managers are chasing performance. Yes, they are always pressured to chase performance. So they will move money to chase the trend, which is the tech stocks, right, in a bid to catch up their performance. Yeah, okay. But when there is a sell-off, they will move money out of that stock because they don't want to get themselves killed, right? So in the meantime, when there's a sell-off, they will move their money from high-flying tech stocks into safe defensive counters. They are already cheap and they are already undervalued. Why? Because all they're trying to do is to find a hiding ground until the market stabilizes and they will go back to performance chasing mode, right? Now, so these stocks offer them, right, a low downside, okay, but a potential upside. Now, but imagine when so much money is suddenly flowing, right, into these depressed but value profitable companies. They will cause a sudden drive and a sudden surge in the company's price. And that benefits me, correct? Yeah, now, so let's go hunting, shall we? Now, so let's first look at our portfolios today, all right, and all our stocks that we have trades on, right, which is VZ, all right, GIS, all right, Rio, HIMX, CL, and CPB. They are all currently underwater or break-even prices right now. So there is no panic right now, which means money is not flowing out of the tech stocks. They are just sitting there, right? So these defensive stocks are not getting the love yet, right? Because they will get the love when the market panics and these fund managers will run for cover, right? But there is no need to run for any cover as yet based on what the market has done. Right, so these stocks are falling a little along with the markets. right? Nothing too drastic, nothing that caused me to panic, right? But it just means that I have to stay on. I just have to hold on. Okay, but okay, what I'm going to do is I'm not going to take any portfolio actions. Okay, but I still have some capital at work, right? Why? Because this portfolio, right, is built on $100,000 capital, right? But we have ended our first year, okay, with a profit of about close to 17,000. So what it means right now is this portfolio has about $117,000 in capital, right? And I'm only using up about 90,000 of this capital at the moment. I still have some capital that can go to work. Am I going to put it to work today? Yes, I am. All right, I'm going to go another defensive today. All right, now, so what am I going to do? All right, I'm actually going to go into another defensive stock today. I'm going to add I'm going to add cash flows into my portfolio. All right, now, so for those of you who have just joined us, I realize there's a big group of you. All right, now, if you still want to qualify for our hot and fresh giveaway, all right, I just want to make sure all of you don't miss this out, okay? All right, remember, you have to click on the like, all right, and the share it to public button, yeah? All right, okay, I'm just going to flash this very quickly. Click on the like button on Facebook, this Facebook live session, and then click on share, okay, but make sure you choose the share public one, yeah? Okay, now, so when my team comes back to take a look, all right, as long as you have done both these things, right, you will have your name entered with a number into the grand draw, okay? All right, now, so please make sure you go ahead and do that if you have not done so. Now, so I've taken it off. Let's go. All right, today, all right, what am I going to add? I'm going to add another good old boring company, Kellogg's. Yes, all right, I'm going defensive again, and that means food. That means staples right now. So I'm going to go with Kellogg's over here, all right, and today, this is what I'm going to do. I'm not going to tell you what I'm going to sell until I get my order filled. All right, okay, now, so this is the new deal. I'm not going to tell you what I'm going to do until I get my order filled, okay? All right, give me a minute, everyone. Oh, man. What's going on? Like my portfolio platform has an issue over here. It doesn't like what I want to do. Yes, it's finally functioning. Okay. Give me a minute, everyone. All right, I'm done. Okay, all right, now, so let me show you what I've done over here on my portfolio. I've added the Kellogg's, all right, and what I've done over here is I've chosen the 6250 put options. Right now, this is actually where the stock is right now, and I'm fully comfortable with where the stock is sitting right now, because if we look at Kellogg's, Kellogg's has suffered a sell-off right now because of its earnings. It actually went up, okay, and then the market corrected, okay, together, okay, it's brought the stock down. Okay, but this stock, all right, it's profitable. Look, everyone, it's profitable and it's trading at low PE valuation, 16. Yeah, okay, and it pays almost a 3.7% dividend return. All right, okay, now, so this sets up, all right, for what we call the low valuation, profitable business that is unloved by the market right now. Okay, market doesn't want value, market wants performance. All right, okay, but that's where we've got to be, because we have always got to try to be ahead of the next possible move, right? So today I'm going to add this trade into my portfolio, okay? Now, so I'm going to sell 62.50 for 140 over here for 3 options contract, all right? Now, and that's what I've done over here, right? And I've got it filled, okay? So let all of you verify at 9:45 on the platform, right? Which is about 1 minute ago, right? As you can see, it's 2146 right now on the platform clock, right? I've sold the K October 15, right? 62.50 put options. I've sold 3 of them, right? For 140 over here, right? So this order is already filled, okay? And I'm done, right? So let's go ahead and record this trade on our portfolio, yeah? Right now, this will also be the only trade I'm going to add on today, okay? Why? Because my portfolio is almost at full capacity, right? So I don't want to be too aggressive, right? Adding on new trades, okay, at near market tops over here. But if I do find a bargain, I will decide on adding at least one over here, right? And that is Kellogg's today. Right now, so we are adding the 62.50 puts, right, on the 10th of September, right? And we are collecting about 140 today, right now. So that will pay me 420 in cash flows, right? And it'll set aside 18,750 to buy 300 shares at 62.50, right? So that's the capital I'm allocating to this trade, right? Now, before any of you ask me the same question, Terence, how do you choose this trade? All right, can you do it in any other format? Please understand, Friday sessions are done from an investment perspective, right? And I've always said this, I don't care about the timing. As you can see just now, there are no indicators on my screen. I don't look at the timing at all, right? All I care about is the fundamentals and is the stock cheap right now? Why? Because if I'm wrong, right, I'm fully capable, right, because I've allocated the capital to buy and hold the stock. Yeah, okay, so it has a totally different philosophy, right, from trading that I do with options, right? So what I do with my members, okay, what I do with my training community is totally different from how I handle my portfolio on Fridays. Why? Because you can see every Friday I'm adding just one stock, one trade, or sometimes 2, right? It takes me like 5 or 10 minutes to actually place the order. Yeah, the rest of the time I'm trying to discuss with you the market updates, right, and market outlooks. Yeah, okay, but the real trade only took me 5 minutes out of the entire session, right? And with that, okay, 5 minutes of my time once a week, if we can craft a 17 to 20% return per annum, can you see what you can do if you can know and understand how to trade options instead? Okay, because here I'm not taking any leverage at all, right? Imagine what you can do if you take some leverage, right, but in a very, very safe manner. Yeah, okay, how much better returns can you start to create for yourself, right? So that's the avenue that you can explore, right? If what you see so far, right, you do like it, right? You want to start exploring how you can develop your option selling skill set, right, and make some decent returns for your portfolio, right? So send an email to my team, right? Contact my team somehow or another, right? And seek out all the possible mentorship programs that we have available. Yeah, all right, we cater to all. Yeah, big accounts, small accounts, you will always benefit, all right, from what we have to offer. Yeah, okay, right now. So that's over, and let's calculate the ROIs to this trade, shall we? Right now, so this is going to pay me 140, right, divided by, right, 62.50 per share. So this trade pays me $2.24%. Oh my goodness, 2.24%. Now, and this trade goes on for about 6 weeks. Am I right? Or is it 5 weeks? All right, 35 days divided by 7. That's 5 weeks. All right, so I'm just going to divide this by 5 and then analyze it by multiplying it by 52 weeks. Right now, that pays me 23%. All right, now, so it's well within our target, right? And I'm taking this trade. It's already taken, right now. So that's how I do it over here. Yeah. Okay, everyone. Now, so today I'm just going to add one trade, Kellogg's, into our portfolio. And so far for year 2, where we started in the month of August, all right, until now, we have done about 1, 2, 3, 4, 5, 6, all right, 6 trades so far for our portfolio. Nothing too active, right? But we're still on course to making our 20% target for this year itself, right? Year 2 for our official portfolio. Right now, So I do still have some time as usual, right? If you do have any questions you want to ask me about the portfolio puts, right, or about the stocks that I've discussed today, right, feel free to start posting them into the live comments, yeah? All right, okay, I will start trying to answer some of the questions that you have, okay? But please try to keep it, right, into what we have discussed today, yeah? Okay. In the meantime, while waiting for questions to appear on the screen, all right, I can see that the markets, all right, with the S&P are pushing down, okay, but the technology sector is still holding very, very strong, all right? So we have a market that's not primed, right, to really sell off in a very hard manner today from what we see so far, okay? But, you know, everything can still change, yeah? All right, Christopher, all right, how do I manage an option that's in the money, right? Now, for this portfolio that I do on Friday, right, I've said this over and over and over again, right? I am not shy, right, to actually taking up the stock. Now, look, we had a trade before where we sold a portfolio put on Nokia, right, back in August when we started this whole thing, right? Now, the stock went below and we picked up 300 shares of Nokia, all right, at the $5 stock price, okay? And then we started selling call options, right, while waiting for the stock price to go back up, right? Now, I'm collecting premiums along the way. Now, and eventually what we did was we turned the whole trade profitable. Yeah, okay, we turned the whole trade profitable over here at the end of the day. Yeah, okay, so that's what we wanted to do and we managed to achieve that. Although we sold the stock off at 485, right, when we closed this trade, right? Now, we lost a little on the stock, okay, but overall, we actually ended up making profits, right, with all the options that we have sold, right? Okay, so that's how we'll manage a trade, right, that goes in the money. Yeah. Okay. Now, so Andy, yes. All right. Andy is pretty much asking, answering what I'm saying to you as well. All right. Now, so the second stock that we did, all right, or this happened was actually on Consolidated Edison, ED. Right now, it also went below our stock price or our strike price, and I ended up buying the stock at $70. Yeah. Okay. I closed the stock at 68.80. Right. But because of these two premiums that I've sold and collected, right, I still ended up with a profit on this trade. Look, right, I collected a total of 255 plus 270, right? But I only lost 360 on the stock, right? So if I look at the entire trade on ED, it would have still been a profitable trade at the end of the day, right? Now, so that's how we manage, right, any portfolio puts that goes in the money, right, with this portfolio that we're building over here. Yeah, all right. Now, thank you very much, Andy, for helping to answer. All right, Susan. All right, now, so Susan is asking, will you also show how to sell calls during Friday sessions too? Yes, all right, now, so if any, touch wood, yeah, all right, okay, if any of the stocks end up, all right, getting assigned to us because it didn't perform according to what we want, okay, then I will be adding call options. That's what I did here, right, with Consolidated Edison. Right, that's what I did. All right, so I will show you what call options I sell, right, while you know holding on to it. Yeah, so that's what I'll be doing over here, right? Andy. All right, now Andy. All right, now so you are comfortable doing a Tupperware trade on your own. All right, I don't have it. Right, but if you're comfortable owning the stock, then that's fine. Yeah. All right, now so the whole basis of this, right, is no different. Is no different. Right, from building a portfolio of great stocks. So first, before you sell any put options, you must like the stock. Yeah, all right. Otherwise, it's not a very wise decision after all. Yeah, okay. All right, now, Eka. All right, Eka. Now, you know, you are one of our graduates, all right? So I will go back, all right, into asking you, right? How do we build a basket of stocks? What's the rationale behind, all right, our basket of stocks? Right? Do we believe in it? Do we believe that it will always go back up? all right, if the fundamentals does not change, right, then I'm more than happy to hold on to the stock. Why? Because I believe it's not going to go bankrupt, right? And number two, I believe that the stock price will always go higher, right? And number three, when we started the trade, the stock is supposed to already be cheap when I started off, right? So there's no reasons for me to change my view unless, right, the stock or the company changed something from the fundamental side. If they didn't change anything, then I don't have to worry at all. Yeah? Okay, Eka? All right, so I hope I answered that question as well. All right, now, yep, Melinda, all right, Rio is expiring. Let me have a look. Yes, Rio expires on 17th of September. Right, so like what Susan is saying, it may end up, right? You may end up, right, having for me to show all of you how to sell call options on Rio. Yeah, right. I'm keeping my fingers crossed. Right, I'm hoping that we still have about 7 days, right, and we'll have Rio bumping back up. Yeah, okay. Now I don't even need it to cross above 77. Right, if we can get somewhere around 76, 76.50. Right, I believe I should be able to get out of the trade with a profit. Yeah, okay, all right, and then consider reselling another portfolio put. Right, but we'll see how it goes. Yeah, right. No matter what, it seems like I will have to handle the Rio trade next Friday. Ain't we right? Yeah, okay. I'll probably have to show all of you how I'm going to handle the trade next Friday. Okay, because it's going to expire. All right. Eileen, for assigned stocks over here, do we just let the option expire and the stock will automatically be assigned? Right now, the answer will depend on which platform you're doing this on. Right now, if you're doing this on TD Ameritrade, that's okay. If you're doing this on Interactive Brokers, that's okay. But if you're doing this on Tastyworks, it may make more sense for you to manually, right, convert it into a stock. Right? Why? Because Tastyworks still charge fees for options assignment. Right, so if you want to save on those fees, it will make more sense for you to actually just buy the stock. Because right now, you must understand, the US brokers have changed their commission structure. Buying stocks are actually free. Right, and then on Tastyworks, closing option trades are also commission free. So can you see? All right, it's all about the fees and the fee structure. Yeah, okay. Where else for TD Ameritrade and Interactive Brokers, they don't charge fees for option assignment. So it's perfectly fine to just let the option expire and then automatically be assigned the stock, right? So it's all down to the platform itself. Okay, Eileen? Right, I hope that solves your question over here. All right, now, so that seems like the questions that we have because it stopped flowing right now. But if you do have any questions, just leave it or I'll come back next week. Right, and I'll be more than happy to help you out with, some of your dilemmas or questions that you have, okay, with selling portfolio puts. Now, for those of you who are interested to find out more about our potential programs, okay, or, okay, be one of those who will be on our wait list for our next opening for the 24-hour options explosion, right, earnings explosion option, sorry, right, please contact my team, right, because we will be opening up, right, introduction session really soon. Yeah, okay, so speak to my team, send them an email, tell them you're interested, right, to be part of our next October earnings season, right, okay, and they'll put you on the wait list and keep you informed and keep you posted, yeah? Right now, so with that, I would like to end today's portfolio building for cash flow on Fridays with me, Terence, okay, and I'll see all of you next Friday once again, okay? Thank you very much for giving me a Friday evening, and I'll see all of you, same Facebook group. I've got to say this right. Same Facebook group. All right. You'll see me live. Okay. The message will come out and join me next Friday. Okay, everyone. All right. Bye for now and have a great weekend. See you, everyone. Bye-bye.